Hi, I'm Billy Keels, the host of the Going Long podcast. Every week, I'm going to be here interviewing the absolute best in the business as it relates to real asset investing, as well as real Main Street investors. We're going to be having conversations where you can listen in, and that's going to help you to continue on your path to education so that you feel much more comfortable as well as confident in investing long distance. So make sure that you go ahead and subscribe to the channel. Make sure that you're liking it as well, because that way you can get every single episode as soon as it comes out. And by the way, don't forget to leave today's episode a 5-star review. Let's go ahead and listen to today's conversation. Welcome to the Going Long podcast. We're back once again to continue to help to educate you so that you feel much more comfortable as well as confident investing beyond your backyard. I'm your host, Billy Keels. And if you've ever wanted to know how to passively grow your wealth to retirement while working in the IT industry full-time, then guess what? Today's the conversation that you're going to want to listen to until the very last word. Because today's guest has not only worked over 28 years in the IT industry, he also has over $125 million worth of assets under management. I think that's a little bit more than 1,329, and this could have changed, so he'll tell us about it a little bit more. He's also passively invested in over 4,300 units. Definitely want to find out how he's done that. And he loves to travel. He loves movies. He's actively participates in charities as well. And I'm sure he's going to tell us a whole lot about that. And I'm really excited to welcome today's guest to the show, Sridhar Sannidhi. Welcome to the show, Sridhar.
Hey, good morning, Billy. Thanks for having me on the show.
Yeah, I've really enjoyed being able to connect with you before and talk about some of the things that we have in common, the industries that we work in and things like that. And I'm really excited for the entire Going Long family to know more about your story, because you're very active on the active side of investing, as well as have loads of experience on the passive side. And a lot of the people that are watching and listening to us have those same kind of interests. So welcome to the show. And, as I mentioned to you before, I'd like to ask everybody kind of the same 5 questions, 2 in the beginning and 3 at the end. And so help us understand, Sridhar, where exactly do you live in the United States?
I live in Dallas, Texas. It is one of the southern states in Texas. One of the southern states in the United States.
All right, perfect. In the great state of Texas. So we like that.
Mm-hmm.
Dallas is an area that's got a lot going on. So appreciate that. And Sridhar, what is the most positive thing that's happened to you in the last 24 hours?
So in real estate, getting one more deal is the most positive thing. That's what happened in last 24 hours.
Oh, congratulations, man. We like that.
Thank you.
Yeah, awesome. What was if you're able to talk about the deal, what was it?
I can give you the detail, but without giving very specifics because of the SEC rules, right?
Yeah.
So it's one of the largest deals I have not done yet, so I'm going to be part of it.
Okay, fantastic. Well, definitely will. Not that one specifically, but I'm sure you have others that are very similar. If you look over 4,300 units, and so we'll definitely have some things to talk about. So thank you very much for sharing that positive bit of information. And Sridhar, help us. I've talked about a couple of things at a very high level. I talked about some of the things that were important to you, but if you could help the Going Long family really understand some of the different decisions that you've made and what's helped you to get to this point in your investing journey.
Yeah, I've been, very keen on investing outside my regular job for a long time. I used to work in Wall Street. I worked there for 18 years almost. And I used to commute 2 hours each way to New York City. I used to live in New Jersey and used to commute to New York City. So I had this ambition, but I could never fulfill. So during this journey, I always used to feel that I have to do something. And finally, one fine day, I sold my house and relocated to Texas. So I thought, now I cannot do that journey anymore, 2 hours each way. And I relocated, and then initially I tried to build a single family portfolio. And I was putting a lot of effort, but a lot of competition was there. So I was not successful even after trying for more than a year. That's when I switched to commercial, because I felt that by going big, I will have lesser competition. So really, that's what worked. And then I started building the portfolio in no time.
Wow. Okay. So that's pretty amazing. So you were traveling 2 hours to work and 2 hours back from work, which is a
Yep.
typical transit, right, in the New York City
Yeah.
area, which can get to be really, really crazy. And so you got fed up with that. But one of the things that you said before we talk about you getting into building the single family portfolio, but you mentioned that you had this unfulfilled ambition.
Yep.
What was the ambition that was unfulfilled?
So obviously everybody wants to build wealth, right? So I wanted to do some business. Being an IT professional, and most of the IT professionals do prefer to start a company and do a new product, a new service, or something like that. I attempted to do a few of them, and most of the times my partners were there, but not there. Like halfway through the project, they used to say, "Okay, maybe we are busy. It's not the time to we start," or something like that. So that discouragement was there. So once you start a business and if you could not complete it, even though the vision and the product or service is really good, and that feeling of non-completion comes to mind, and then say that I have to achieve it. So I think in that unfulfilled strategy, unfulfilled wish, right? Uh, that drags me to do something. So I felt this real estate is the one which I can do by myself, not depending on many others.
Yeah. And so that is one of those. So it's that sensation of not really being able to achieve what you wanted to be able to achieve. So it sounds like you had some additional energy that you wanted to be able to place somewhere else. And then it was real estate that found that energy. You started it with the smaller or single family homes in terms of portfolios. But like if you're working on Wall Street in the financial sector, were you in IT there as well?
Yes, okay. I was in IT, and my first idea, nowadays it is a multi-billion-dollar idea, is a peer-to-peer lending when the internet was even in the very infancy stage. That was my first idea. We did a whiteboarding, and we could not do, but if today you know how many peer-to-peer lending sites have come up.
Yeah. Peer-to-peer lending is sort of popular. Yeah, extremely popular. So what was it about real estate, right? Because Sridhar, you could have picked anything, right? You could have picked pretty much anything, but you had this extra energy, and that extra energy went towards real estate.
Yep.
What was the attraction?
So the real estate is obviously when I did a little bit of research, outside the IT companies and outside the stock trading companies, real estate is the only industry which helped a lot of individuals to build wealth. So even now, if you do Google, right, most of the billionaires are made in real estate. I thought, let me start building wealth. And once it frees up my time, then I will go back and start my IT company. Still, that wish is there.
Start your own IT company. I like that. So it's really the fact that real estate already had a proof of concept, because you've done your research and you recognize, okay, there's building a business. It could be an IT business, but then you looked and saw where the patterns were, right? A lot of times people talk about having patterns and principles. And so you saw the pattern was there for building wealth and being able to do that through real estate. So that is kind of what took you to the real estate path. So, so you started out in single family, right? And you're doing that. You're working your day job. So you've always worked a day job while you.
Yeah, even now I have my day job.
Okay, yeah. So I can relate to that a lot, and a lot of people that are watching us, most of us are doing that as well. So then you move to multifamily, but just coming back to when you were doing the real estate in the beginning, were you active from the very beginning, buying them in your own portfolio and using your day job? That kind of the financing from your day job allowed you to get a mortgage, and then you were buying properties yourself, or is that how you started?
No, when I started doing this research on single families, and then I went to a couple of websites, and there people started talking about this passive investments. So my first attraction was to a couple of passive investment, and today I get surprised like that. I took this action just like that. I don't know the sponsors, I don't know the market, okay, but I did a little bit of research based on their website that seems to be very genuine. So I invested in that deal.
Wow. Okay. So you started out then passively
Yep.
investing. You looked at someone's website. You didn't know the location. You didn't
Yep.
know it at that point in time. You didn't really know the sponsor, but you liked their
Yep.
website. So, but you took
Yeah.
action, right? And so I think
Yeah.
this is really important just to help people understand that sometimes it's just about taking action. So maybe talk us through what that very first passive investment was like for you.
Yeah. So the very first one, obviously, even though I researched on the website, I got that referral from Bigger Pockets. If you are familiar with investments, right? Bigger Pockets is one of the big portfolio. I mean, sorry, big this one content area where a lot of people talk about real estate investing. So I was browsing all that. That's where people started conversating about this website, and then I thought, okay, there's so many people talking about it. Let me do a research, and then uh, once I saw that website and once I know the location where they're investing in, then I did a little more research from my own way, and then I found out that that city is growing, and then a lot of youngsters are relocating to that city. So I felt that if the youngsters are relocating, which means that job market is growing in that city. So with that research, then the next thing obviously you need to do a little bit research on the sponsors. Even though I don't know them, I looked at their previous projects and I looked at their track record. So then I felt comfortable and then I took the action based on that.
Okay. So that's interesting. So do you come from a family of people that invested in real estate?
No.
Okay. So I don't either, right? And so a lot of the things I really want to go back to what you're talking about, because I think it's fascinating that you don't come from a background of a family that was involved in real estate. You're working a day job in the IT industry, like most of us in financial services sector. And then you're now in really looking to invest in something that's outside of Wall Street where you were working, right? Which is also something that's very different. And as you started looking, you, without having any knowledge, you started thinking about things that are really two of the most important things when you're looking at where you want to invest, right? Number one, the number one, you need to be very clear on what it is that you want to be able to achieve. But then you talked about where the people are, right? In terms of, and I guess if we put it in a sophisticated language, it's net migration. Are there more people going to a place than leaving? You didn't know that word, but you were recognizing, okay, it seems like a lot of people are going there. And then you talk about the jobs, which is something that's also really, really important. So because you didn't know what you didn't know, like why were you looking at things like people, jobs, and then the sponsor?
So my my thought process is if more people are moving there, then there would be need for more housing, right? So the housing usually they build over a period of time, and it takes a lot of effort to get the permits and build the units, and they cannot build over time. So there is a disparity at the pace at which the new how construction is happening versus the demand from population migration, right? So I saw a little bit of that in that city. So I thought definitely the how rents will go up. That in turn will give a little bit of leverage for these multifamily operators to charge more and then increase the profits. So obviously in the multifamily, what I understood is if by increasing the net operating income, the values will go up significantly. So that with that in mind, I went full-fledged. Yeah.
Okay, perfect. So you took then your previous financial background experience, you started understanding the model, you recognized that one of the key metrics that they were talking about in the multifamily space was this thing called net operating income. And for those of you that may be listening for the very first time, in its most simple form, it is what are all of the different sources of revenue that come into a particular property, minus all of the let's call them operating expenses, like the expenses that keep the property moving. And then that gets you to your net operating income. And the valuation of the property is really based on how hefty that net operating income is. And then it's in function of a cap rate and all these kinds of things. But the net operating income is really what you want to, and what you noticed right away, Sridhar, that is the thing that you wanted to be focusing on as you started talking to your sponsors and looking at the specific opportunities. So tell us a little bit about, so then I mentioned before, like you went from no properties in your portfolio to over 4,300 properties in your portfolio, right? And so I think a lot of times when people are working in a full-time corporate job, there's this thing of, I want to get into real estate. And so you want to buy a house, right? And I know that I wanted to do that, but very fortunately for me, I wasn't able to do that because I live in Spain and it's appreciation type of market, not versus the cash flow markets that I was looking in. And so I was upset at the time, but it's been a big surprise for me because I found out about this world called passive investing and being able to make sure that my capital is always moving, even while I'm working in my day job. So maybe talk to us a little bit about what the things that you've seen by passively investing with other teams initially, and then we're going to come back to you being more of an active investor. But talk us through what you liked about, and what you like about passive investing, and how you were able to build a portfolio that includes over 4,300 units.
Sure. Just a little bit of addition. Prior to investing in United States, I came from India. So my first thing is, okay, before I adjust my legal status, so somewhere I have to park my money. So while I was working in Wall Street, I started buying few properties in India. But I was not so keen on that rental income or anything like that. Just building the properties with the intention that they will appreciate over a period of time. And then if I ever go back, then I can use that cash, or I can live in those properties. That was the intention, and I built it. So it was not going well. So then, managing those properties remotely is obviously it's a challenge if we buy by ourselves, right?
Yeah, so you were living in the U.S. and managing your properties in India, right?
Yes.
By the way, I've done that from Barcelona back in the United States. So we have that in common as well, Sridhar. Tell everyone what that experience was like.
It is very difficult. At least in the United States, you have a pretty much structured way of doing things. Whereas in other countries, right, those businesses are not there managing properties remotely. So you have to depend on close friends and family members. So for them, it is a secondary priority, right? They have their own day-to-day lives and before doing anything for others. So that oftentimes it became a challenge to take care of things. So I thought it's better to start investing locally first and then see how I would fare in that one. So with that intention, I started looking at, once I relocated from New York to Texas, I had more time. So literally I freed up 4 hours commute. So that 4 hours, I thought I should invest wisely. And then with that 4 hours, even today, those 4 hours is my investment to real estate. Every day, I feel as if I'm going to New York City. And those 4 hours I sit and then analyze all the real estate deals and do everything. So back to passive investment. So obviously, when W-2 money is coming in, so I want to build a cash flow. Means I want to build a second income. So I did read so many websites and blogs, and where everybody says that you need to have multiple sources of income, right? So with that influence, then I started looking in different options, and then commercial passive investment seems to be the way to go. I happen to attend multiple weekend real estate seminars and those things also. So many hosts have mentioned that start working on your passive income and cash flows and all that. So I happened to meet one of the mentors. He said that, multifamily gives a real good income flow. And at the same time, his approach is, you're helping all these tenants by renovating the units, improving their living conditions, and yet you're making money on it. So I like that idea of helping and then making sure that we are getting our cash flow. So with that, I jumped into that business, and slowly, after doing a couple of deals passively, then I joined the mentoring program. And then after that, started co-sponsoring. And at the same time, started building these passive investments too. So far, I have done well. even in the middle of the Corona thing, we closed one deal. So that's a big thing. It's a 400 plus unit deal. And this year, my target is to do 2,000 plus units as a sponsor, because last year was a slow market for us. So this year, we want to do a lot. So I'm going to exceed that number as of now with the number of deals in pipeline. I'm pretty strong on that one. But I would continue to build a passive income flow. So my goal is at least to do 2 passive investments. If time permits, maybe 4. So analyzing these passive deals takes time. So there are several aspects I look into. First, I want to diversify my passive investments within the United States. So there are several markets where I see the phenomena of net new migration and job growth, and then the ecosystem buildup for business. So all those factors I keep looking in, and then I see in several cities. So I cannot go and analyze the deal in every city and then do an active deal. So I do research on the good deals from those markets, and I invest even now. So my goal is at least do 1 or 2 deals in a year as passively, and if possible, up to 4. Okay. So time is the key, crucial thing while working a full time, right?
Yeah, exactly. I mean, and I like a couple of things. I just want to highlight a couple of things that you said, right? Because you're in a full time job. You started recognizing that you had 2 hours a day in the morning, 2 hours in the day in the evening. So now you have a 4 hours that are built into your lifestyle now, right? And so you think about it as you're doing the same commute, but now you're looking at your underwriting, you're building teams, you're building relationships during that 4 hour period, right? And that is one of the things that is helping you to be able to build your passive income portfolio. And so when you have a clear target that you've already set for yourself, that you know that you want to be able to do 2 passive investments, potentially 4. And we talked about this earlier, Sridhar, that you have had in your portfolio in over 4,300 units. And so some people are probably thinking to themselves, all right, well, Sridhar is in a very good IT role, working for an IT company. He's been very successful because he has thousands of doors in his portfolio. He's building up his passive income. Why would he keep going to his day job? I know I get the question all the time. So kind of help people understand why you can actually, why you've made the decision to continue to work a day job and have thousands of doors in your portfolio.
Yeah, there are a couple of life events still I have to wait for. So my kids are about to go to college. So that is one reason I need to have the stability for a couple more years. So thank God I can financially take freedom from, financially I'm okay, so that I can leave the IT job and then focus on real estate. But the other events, life events, I need to make sure that things go smoothly. So the college, in 2 years, both my kids will be in college. So that I don't want to take any risk at this juncture. So even though it gives me enough income flow.
Yeah. And you know what? And I appreciate you sharing that, Sridhar, because I think a lot of times people say you have to do one or the other. I mean, most of the people that are already here with the Going Long family, they know that I'm a big believer in you can do both. It's not a matter of select one or the other. It's the fact that you have your passive income build up to a way or to a level that allows you to know that you can more than replace your active income. You're going into your role because you want to, not because you have to. And I think that's a really big win, not just for you personally, for your family, and for the employer that is employing you during the day, because you want to be there. It's not that you have to be there. And I think a lot of times it's great to hear stories like yours, because it really iterates the fact that this is the power of being able to work a W-2 and be able to focus on building your passive incme. So Sridhar,
one more thing I want to add, and I love my job, the current job. I'm a solution architect for one of the large IT companies. So day to day, I solve problems. That's what my role is. So helping large enterprise customers to solve the problems. So I learned something new, and at the same time, I solved something new. So that's really fulfilling.
Yeah, and I love that you said that, Sridhar, because it's the same thing. Like during the day, right? I am also working for a very large enterprise-wide company that solves multi-billion euro-dollar problems, right? And it's really fulfilling to be able to know that you are a part of a conversation, you're influencing that conversation, and you're helping these very large organizations solve real problems, right? And so that's also very stimulating to be able to be a part of those types of conversations and be able to help people solve their problems, right? Or help large enterprises solve their problems as well. So one of the other things is, so you started out and you were doing a lot of this passively. And when we say passively, Sridhar and I are talking about that he selected someone else to be the steward of his capital. And he's placing, I don't know, 50, 100,000, whatever the case may be, whatever the limit is or the minimum for the sponsor, or maybe beyond that because you've worked with the sponsor a number of times. But then you also decided, and it sounds like one of the things you're talking about, that not just being a passive investor, but then you made a decision to become an active investor. So to really lead the train, being a general partner or a key partner or a sponsor, or any of those are all pretty much the same. So help us understand, why did you make that jump to become a general partner?
Yeah, that's a very good question. So as you keep attending these multiple network conferences, right, multiple real estate conferences, you get motivated with what different people are doing, and then you get to change your goals, you get to change your way you operate, and then see the revenue. So I noticed a couple of people who were doing actively while they're doing the full-time job. I thought, why can't I do? If they are doing it, I should be able to do it, right? So that was my first question, and then I immediately started working on it. Within a couple of months, I had my first deal as a co-sponsor. So then I felt that it was not that difficult. It is like analyzing a passive deal. The only thing is, after the deal is closed, you need to keep working with the property manager. You have a weekly calls and all. So when we co-sponsor, we need to make sure that one of the guys who is a co-sponsor is full-time on that, so that he can do the asset management calls weekly, and then we can support him the remaining activities of ours. So
actually, Sridhar, I'm just going to ask you just one thing, because you just said something I don't want anybody to be kind of left behind. So you talked about being the general sponsor, and then you said someone has to be full-time so that they can help to manage the asset. Maybe for some people that could be a new concept. So what's the difference between being the general sponsor and actually managing the asset, so people are clear with that, what you mean by that?
Okay, so when you acquire the asset, right, first you find the asset, and then once you find the asset, then you go into contract and you raise the funds, and then you purchase the asset. After that, you hire a property manager to take care of these properties. These are big complexes, right? So the property managers will do their day-to-day operations, but as a general partner, means whoever has built the deal and then made sure that funding happened, and then made sure that the KPIs, the key performance indicators, are the business plan, KPIs, whatever you can say, are being properly executed, right? The business plan is properly executed. That is the role of an asset manager or a GP. In the GP pool, typically anybody can be a GP, and all the people who are working full-time can be GPs. But then the challenge would be, if there is a need to go near the property, who will go there? And how do they conduct a weekly meeting with the property manager to make sure that they're meeting the key performance indicators in the business, right? So that is where I prefer at least one person who is full-time into the real estate, not doing a W-2 job, will help. So that way it relieves us, so that even without that also you can manage. So as long as you're able to schedule a meeting with the property manager after office hours, right? So then that is doable too. A lot of people are doing that also. But I felt that if the partner is full-time into this one, then that relieves big time. So that's how I partnered. And then so far I was able to do all the deals like that.
All right, fantastic. And that helps out a lot, Sridhar, just in terms of helping people understand. And when you mentioned the GP, that's the general partner, which basically can be a number of people, right? And as you mentioned before, you can co-sponsor, and each person brings something in their investor pool together. And at the end of the day, and this is really, this depends on each individual partnership, is really to understand what makes the most sense for the partnership. And Sridhar, to your point, you always want to make sure that you're co-sponsoring something where there is at least one person that is focused full-time on being able to manage the asset and things that are happening during the day. So you have those set of eyes that are really focused on making sure that you are performing with those KPIs or those key performance indicators that you've established and communicated to your team and to your investors. So that makes a lot of sense, man. This has been really cool. At a certain point though, I guess we kind of have to get to what we like to call the going long final three, Sridhar. And so the thing is, I never ask anybody, never, the going long final three, unless they tell me, which means that you tell me that you're ready for me to ask the question. So are you ready?
Yeah, I'm ready.
All right, perfect. Here we go. All right. So the very first of the going long final three, Sridhar, we started with you being over in the United States. And now I'd like to bring it back this way to Europe because I'm over here. And so help me and the entire Going Long family understand, what is your favorite European city, either that you've visited or still on your bucket list to visit?
I like Paris because of its historic nature and all. So the city is built beautifully, and I visited Paris. I like it. But place-wise, I like Switzerland more than Paris. So because I like nature, I love nature. So as a place, I like Switzerland, but as a city, Paris.
Paris. Okay, so we'll take Paris as your favorite city, and I love Switzerland as well. It's a great place. It's a great place a great country to visit. So, on to one of the things that I know about all successful people, and you're a very successful person, Sridhar, is that most successful people only make one mistake in their entire journey. I get that wrong every single time. So let me start over again. So it is actually all successful people make lots and lots and lots of mistakes, failures, learning opportunities, whatever you want to call them, right? And so everyone's been through that. So I would love for you to share, more importantly than the mistake that happened, what is the one lesson that you've learned from one of those learning opportunities that you would want to pay forward to me and the Going Long family today?
Yeah, as I mentioned earlier, I explored so many business opportunities, right? I started so many businesses and I left in the middle while I was working full-time in Wall Street. The mistake I did was I partnered with people who doesn't share the same passion as me when we are exploring the business idea. So that really, really is a big issue for me. So after that, when I started the real estate one, I made sure that my partner has the same level of passion or even more. So I'm picking those partners only. I get on a weekly basis, I get at least one request to partner with me on these real estate deals. So I don't agree with every one of them. I don't entertain most of them. And I try to keep the teams which are really passionate about doing the business and making sure whatever have been promised are delivered.
Okay, perfect. So really making sure that the people that you partner with, that they share your passion, share your drive, and because that's going to help you to get the best results moving forward. And to your point, I mean, Sridhar, the more success that you have, of course, the more people are going to want to gravitate towards you, which absolutely makes sense. And you want to make sure that you are having those people that share your passion with you. So appreciate you sharing that. And this is the last of the Going Long final three. And I always like to help the Going Long family feed our minds with knowledge. So what book would you recommend to the Going Long family, Sridhar?
The Rich Dad, Poor Dad book. That one is really, really changed my life, like many other real estate investors. That's the one which changed mindset. And then after that, I read a few more books, but that one is the initial one, I can say.
All right, perfect. So another vote for Rich Dad, Poor Dad. That little purple book changed so many lives around the world. I know it changed mine for sure. So it has been absolutely amazing. And so, Sridhar, I think about, the very beginning of the conversation, we talked about really how you're helping people to understand how they can passively grow their wealth to retirement and being able to do that while working a full-time job. I mean, you've given us a really great idea, having had some experience of investing a bit when you were in India, and then having been working out on Wall Street in the financial services sector, and you got tired of going back and forth 4 hours a day, and you just pivoted to make a life change. And there you really looked and you found the real estate world. In the real estate world, you kept that similar mindset that you were going to use those same 4 hours. You got the most of those 4 hours, and you continue to do that today. And it's helped you to grow, not just passively, but then also actively to manage and have in your portfolio over 4,000 doors, which I think is a testament to you and the work that you're doing and the teams and the ecosystem that you are building. And, you've even shared with us some of the things to help us understand really when you're looking at partners to make sure that you have the partners that are the right partners and that share your passion. And I know because of all of these things that you've shared with us today, Sridhar, that there are some people that are out there, like so many people that are going, well, I want to talk to Sridhar. I need to pick his brain. I need to understand what's going on. I know he's doing some things, some more investing. And so help us understand, what is the best way for the Going Long family to contact you, to get in touch with you, to learn from you? Help us understand. What's the best way?
So they can visit my website, www.growwealth2retire.com, growwealth2retire.com, or Sridhar@growwealth2retire.com.
All right, growwealth2retire.com. We're also in Sridhar at growwealth
retire.com.
Number 2, the number 2. So
even if you put TO2 also, it will come. But
perfect. And we're going to make it really easy for everybody. Like the Going Long family knows me by now, so we're going to put this in the show notes. So only thing you have to do is find Sridhar's name in the link and just click the link, and it will open all the things that you need to open. So that way that I can never mess this kind of stuff up. So you just click a link and you can get in touch with Sridhar, and we'll make sure that we include all of those in the show notes. And Sridhar, I just on behalf of the entire Going Long family, I want to thank you from the bottom of my heart for you investing your time, helping to share your story and help to educate us more around the passive as well as active investing. So thank you very much for taking your time today.
It's my pleasure. Thanks for this morning and having me on the show. Yeah.
All right. Fantastic. And just a couple of quick words to the Going Long family. Once again, thank you so much for investing your time with Sridhar and I today. He's really helped you to understand even more, like how you can build up thousands of portfolios or units in your portfolio while you're working a day job. So you have a unique opportunity here to share today's episode with at least 2 to 3 other people, help them be influenced positively by Sridhar's example, the things that he's talked about today. And you're also attracting other like-minded members to the Going Long family. And so because of that, I want to thank you for sharing today's episode with 2 or 3 other people, and also for taking the time to leave us your honest review. Like I go through every single review. I want to see what you like about the shows, what you would like for us to change, what are the things that we could talk about in the future. And so definitely take time just to leave a very honest review. Would help us a lot. Appreciate that. And I'm going to be here waiting for you in the very next episode, the very next conversation. And until then, I want you to go out and make it a great day. Thank you very much. Wow, don't you love hearing from top-notch experts in the field? When I was getting started, I really wish that I would have had access to such experts. And even more, I wish they would have given me like a really simple list of things to follow so that I could have gotten to my goals much faster and been much happier even sooner. So that's why I've created for you the 7 things that you should avoid in order to be successful in long-distance investing. And you can pick that up really easily by going to billykeels.com/7 things to avoid. And also, if you liked today's episode, don't forget to leave a 5-star review. I'm looking forward to seeing you on our very next episode, so go out and make it a great day.